Welcome to Trump's world. We're living in a time where absolutely all the charts move based on announcements coming from the White House or from posts on Truth Social. That's exactly why, when we discuss trading and the decisions I personally follow, you must understand that during this period, we need to reduce risk, as technical factors can be invalidated very easily. And trades should only be executed over short time frames, because even the time factor exposes us to new online posts that could contradict the setups we're following at that moment. That's why I wanted to show you a few more things about what happened yesterday. And after that, we'll go on to discuss the information, the trades I'm following today. Here, again, I was watching last night's conference and the things mentioned by Trump, which normally weren't perceived that positively by the market. And then there was the announcement that America would be interested in a 30-day period with no more exchanges of fire. And at that point, the market perceived this information as positive. But for now, Iran doesn't seem, it seems, they don't share the same expectations. And yet we have an upward movement. This would mean that normally the market places much more emphasis on what Trump says and the things he mentions, right? That's why I can say that from a fundamental standpoint, we have a slightly bullish sentiment throughout today until the next announcements. But now, coming to the high time frame, we need to look at what the chart is doing on a high time frame, and based on that, we'll go and think about what decisions we want to make on the low time frame. We see first of all that we had a reaction from the bottom. This trend line wasn't touched, a line that right now is very important because it defines this bearish flag. However, I'll show you on the USDT dominance that the reaction was from a trend line there, and now we could be on an upward move fueled by the fundamental side. Automatically, we expand on a lower time frame and think as follows. Okay, what's happening here? What trade could I look for? How far could I look? Well, I see that we've even passed this area of highs. We're in a bullish zone where normally the price could climb to the next resistance. For me, the next resistance could be this area from where the price previously dropped. So that would mean that throughout today, if we have a continuation move to the upside, I'm only interested in buy setups. And we'll see if we can find something in this area on a lower time frame. Right now, I don't see a consolidation below this key level to take a trade with the stop loss below the consolidation. That's why if I get a consolidation above this level, I'll take buy trades based on it. I was telling you that USDT dominance is what helps us see certain very important things about the market movement here as well. As I was saying, here we have that trend line, which is much more important. And we see that it's the one that provided the point from which the market turned. And at the same time, I see that USDT dominance has started to drop below this support zone. That's why I'm interested in that consolidation and trading strictly based on it. If it returns above this zone, which is now resistance, at that point we enter a zone where the probability is for dominance to increase, the market to drop, and I wouldn't be interested in trades, at least in the current market context, where Donald Trump is trying to come up with all sorts of positive things to keep oil in a somewhat okay zone and investments from crashing. And that's why I'm looking more at the bullish side. Anyway, for those of you who want to learn more, I'll explain at the end how you can get that 100% free course, which will help you better understand my approach and in the current market. I'm discussing the same thing on the S&P, seeing the interest in reviving the investment market. Even though we're on a downward move, we're now under the influence of some fundamental moves. We have a potential bullish flag in this area, yes, which we see that after the breakout, the retest even went slightly below this low because it happened after the conference, and then it was invalidated. Now, we see that we have a very important resistance zone here, but in this resistance zone, we need to understand the following aspect. I can't take a buy trade here with the stop loss below this zone because normally it would be a take profit well above the previous high. So these trades on the S&P, I would look for them as follows. If I have a breakout that allows me on the retest to take a trade with a take profit up to these highs, so that after that, the next take profit would be in this area. So on the S&P, I would look at things this way. Let's see how it looks on gold too. On gold, it seems that the positivity is greater. So, seeing what's happening right now on gold, yes, okay, it crashed, but we see at the same time that after this aggressive crash, it has a somewhat more aggressive recovery. We're expanding on a smaller time frame, and we see that gold still seems to be ahead of the others. That would mean I'd focus more on gold today, seeing that it seems to be enjoying a bit more interest. You see the same bullish flag that we saw on the others. Bitcoin would be somewhere in this area. The S&P is somewhere in this area, and look where gold is, because to some extent they are currently correlated, right? So if gold seems to be enjoying the most interest, then the trades would be as follows. If I look for a trade above this high, I clearly want to take my profit up to the previous high, the high here on the left, because normally that's about the distance it should cover. If this high is also broken, only then will I actually start to look for any new trades, but only after the price is clearly moved above that high. I want to make sure the move is confirmed before considering any new positions. Let's look at a smaller time frame. But no, I can't say I have a bullish flag here to trade on, but I notice another aspect. We see that this high is related to this one here, right? And we see the downward move started from here, which is why it becomes an important resistance zone. Yes. So in the current situation, I'd wait for a break above this resistance zone to see if there's a retest. Noting that luck in the past, we had a consolidation here below the zone. We had a breakout, but no retest. That's why this strategy I use gives me peace of mind and offers more than truly satisfactory profits. But I can't execute every setup I track, just as high probability setups don't always yield profit. But we must understand the pros and cons. Let's see what's happening with oils. On oil, there was this short setup yesterday based on this bearish flag, but it seems the market ignored technicals, waiting for the conference instead. And following Trump's comments, we saw the rest of the market moves. Now, looking at the technicals and current conditions, we have a consolidation, breakout, and retest in the form of a bearish flag. A new downward move has begun. We have a new consolidation here. Normally, I'm interested in the breakout because the entire previous impulse tends to be bearish. If I go for a breakout in this area, I want to take profit down to this low. And once it passes that low, I'll look for new sell setups. And those are the plans for Forex, S&P, gold, and oil. Let's see how the euro looks. On the euro, remember we discussed in detail several different scenarios for a potential false breakout in this area just yesterday, right? I want to make sure you recall that conversation because it's really important for understanding what might happen next. The first setup would be a false breakout if the price crosses, but we see that after the false breakout, the price went to the open, hit a profit target, and only then retested, eventually reaching the conference where technicals gave way to fundamentals. So, one of yesterday's setups in my plan didn't offer a retest, but moved in the desired direction, yielding profit. And at that point, there's no sense in entering when the price returns. And let me see, out of curiosity, but I don't think so. Here, when the retest actually came, which didn't offer. No. So it went up to 1.8 because, in fact, there wasn't that much interest in the market anymore as the move reached its profit target. Let's see where the open is today, though. Okay. Okay. Yes, I see the open would be in this area, the London Open, because I'm very interested in it. And we see it still an important support zone. We start from the higher time frame, trying to understand what's happening on the higher time frame. We see we have an impulse, right? And a sideways movement. From a technical standpoint, we're in a potential bullish pattern. If we look at what's happening on a slightly, no, actually not necessarily a lower time frame, we see we had a downward move after the price reached the resistance zone. And I see we also have the open in this area. Taking previous moves into account, I'd think of bullish moves, including now during this period. How do we proceed? Because we see right now, I'm no longer interested in executing at the open because we already see there was a retest here, there was a reaction, and yet the price didn't reach the previous high. and it's coming back to the open. This could be a sign of weakness. It doesn't mean that if I see this weakness, I'm necessarily interested in sell trades. Moving forward, I'd wait to see if a fake breakout occurs at this open zone and look for a long trade, but with a much lower risk, as I told you. Or if the price goes above the previous highs, the daily high, and at that point have a buy trade up to the previous day's high. And these would be two setups I'd look for throughout the day today on the euro. Any other downward move wouldn't interest me because, as I told you, fundamental factors lead me toward downward moves on the dollar, upward moves across the market, and potentially downward moves on oil. If you like this information and want to better understand my strategy, as I said, I've made those 100% free courses, that 100% free trading course. You have the affiliate link to BingX in the description of this material. You create an account on BingX through my affiliate link, generate a volume of $100. Anyway, you'll also receive some bonuses from them for creating the account and following all the steps to get the course, as I said. And after that, you have an email where you message me with your UID, and I'll take care of giving you access to the course so you can better understand all these strategies I use to make a profit. All that's left for me is to wish you a wonderful day ahead. Good luck with everything you planned. And of course, last but not least, smile more often because it doesn't cost you anything.